Brilliant. Hello, everyone. Sorry about the delay. It's been a bit of a strange old morning. How are you all getting on with this market then? So it looks like we are having a little bit of a bounce in NASDAQ and some of the indices. Gold is struggling still, isn't it, with that overweighing selling around the 2400 level. I did notice late on Friday that there was a couple of contracts popped up for delivery, which was all to do with the trade below 2400. So, as I said earlier, I think that the market is testing to see where the physical buyers are this week. That is why it's probably not totally created yet, but it doesn't look like anyone's really paying up above 2400. To me, we're in a similar position going into the tech part of the earnings season, just like we were in April after that had really sold off. Are we going to have big enough beats to keep us going up? It looks to me like we went a little bit early on the rotation trade. Generally, that goes within a month of the first cut. The first cut, if it's coming, is in September. And 5 days was a record move for small cap. I think it was just overdue a little bit of rotation. So could easily carry on doing this. Like I say, I think we're probably at the bottom of the channel for the sell-off. It's certainly a good point to have at least a bounce. And so far we are getting that trading bounce today. Does the Biden pulling out make much difference? Well, it means that it's not a one-way bet for Trump. At least there's going to be a little bit of fight. I think the problem for the Democrats was that going into the weekend, there's a 37% chance that Trump wins both the Senate and Congress, in which case he's got total power. So the Democrats may not necessarily think they're going to win the election, but they can possibly win one of the houses. So just put a limit on what Trump can get up to, which would mirror a lot of what's gone on around the world this year, isn't it? Nothing's really been clear-cut election-wise. Even the Labour thing saw some strange moves into other parties. So could be another one where it looks like there's a clear roadmap, but there'll be some obstructions in the way. So that's possibly what the market will look at. But at the moment, it looks very much like bonds are in the ascendancy. There is, as we'll discuss, problems in China, which is deflation adding to the disinflation trend. So bonds are seeing inflows. There was a golden cross on the 20-year in the long bond area last week, which is bullish for entry. We talked about how we thought we'd keep seeing inflows, and so it proved. And Europe has never been cheaper than it is right now against US equities. So is that a case of seeing inflows now, or maybe once we do top out and get a proper rotation into the fall, into September, August, September, perhaps we start seeing money then move across to Europe, but not necessarily through this earnings season. So any questions from anyone out there? How are you seeing it? Are you playing? Are you on the sidelines? I've managed to spark the sell-off in gold. That's just dropped another $5. I saw and looked at some of the data. The open interest on the short side in the yen rattled off a little bit last week. So that is showing you that a lot of the fast money is moving away from the one-way bet, but we'll have to see what happens with policy. So Edward's waiting for NASDAQ and the DAX. Yeah, I mean, they are both sort of digging in. You just presume you want to buy on a pullback. But, so the situation in China obviously missed their numbers last week. They had that third plenum, which we're talking about, their big strategy thing. Nothing has really come out of that. They said they want to be sort of sensible, strategic. The only thing that's holding up is industrial production, which is what they said the new policy was going to be. Hello, David Prudvi. But there wasn't anything really coming out of that, no real stimulus measures yet. So there's a bit of pressure going on the currency side of things. They cut rates to try and spur a bit of stimulus today, but that's not really having much effect. It's also causing some issues. The bond market in China is the only thing that's really rallying because they're seeing this deflationary trend, flight to safety. The problem is there's a capital flight with the currency falling, as well as the growth rate falling and the stock market struggling. There's no reason to invest there. So they've got this doom loop. But the problem is once that happens in Asia, that drags everyone else down. No one else can really afford the Chinese currency to be too low. So they need some help from the US. And this could have the problem read through for the Japanese yen in that they want to try and raise rates, but I'm not sure just how strong they want to be short term relative to China. Could cause them a few intra-region problems. So I don't think UJ particularly is ready for pushback on rate hikes at the meeting. So we'll see what happens in Tokyo CPI on Friday. That is the last piece of data for them before their meeting. But it might be the way it's set up and the way it's consolidated so aggressively, which we'll look at. There could be another spike in UJ, and that could be the perceived policy error of not pushing rates up. But we'll see how that plays out. Question, do I do a market preview every week? Yeah, every week on Monday and then a kind of review on Friday, David. So they're on YouTube or just join us live, ask anything you want. So I'll just run through the preview before we look at the charts. Same old. Obviously last week they announced Vance. Why did they announce Vance as the runner? Obviously the young face, blue collar facing, and he's got this VC background and Silicon Valley background. So they obviously want to be aligned with Silicon Valley and the tech, regardless of what anyone says about the whole China thing. They're not trying to derail the US tech industry. They're trying to take it home. And obviously other trades, they're sympathetic to cryptocurrencies. That may change if the world goes down the gold standard route, but Trump will go on anything that is populous. And if that's a way of revaluing the economy on the gold standard and creating a gold reserve account that we've discussed many times before, then he'll create that American miracle. Obviously, it will be down to him. So yeah, I mean, Elon Musk is all over backing. He's throwing loads of money at the Trump PAC, isn't he? So Biden obviously dropped out. Honourable thing to do. Is it going to make any difference to that Trump trade? At the margins, at the moment, probably not until they definitely confirm and create some kind of momentum behind Harris and come up with something to try and catch up the gap. Obviously, if they get a lot of money thrown at them as well, it will at least make it interesting. Might just take off the edges of any rotation trades that were happening short term. But really, this is all about micro right now. Hopefully, politics gets pushed into the background for a week or so. And we've got Tesla and Alphabet this week. And as I said, this week, we've got 31% of the S&P actually reporting. This week and next week are the important ones. So as you can see, I put a little chart into this week's preview. Obviously, just got the two pictures on Vance that just highlight why they chose him. Yeah, reporting wise for Q2, we've only had a few so far. Earnings wise, they are beating, but the quantum of it hasn't been massive yet. So the next 2 weeks are big for the earnings season as a whole. 31% this week, 31% next week. Nvidia doesn't report until out here in the very last week, as you know, but it very much mirrors what we were saying before. So the whole NASDAQ, we've had a couple of goes at selling off at the start of 24, then the April one. And again, we're in the very similar second week of the quarter. The earnings came through and we've rallied up again. But to me, the only issue I've got, even though I'm expecting one more bounce, which becomes quite a big overthrow, and we're just back on the verge of returning to that old blue channel of which we're overthrowing. Wouldn't really like to see us come too much more into that. because there's a case for obviously dragging this third wave having finished recently. But I still think net we've got big inflows still, as I mentioned at the start, into large cap tech. We've had just over equal legs consolidation. We've bounced off that. I think things are still in the favour of one more seasonal topping out into August, and then it's time to move to sidelines. Not that one, isn't it? It's that one. Yeah, so even though the quantum isn't huge, it's still the highest year-on-year earnings growth rate for a quarter since Q4 21. So I mentioned this on Friday again, is that, well, Edward, I think if we come off till the end of the month, I think unless there's something amazing happens at the start of August, we're going to have a problem, because it's that is a real seasonal patterns. And they've got the risk of not delivering anything in advance at the Jackson Hole around that period as well. But it could be brought forward. Not things rhyme, not necessarily repeat. Yeah, I thought we could obviously still carry on going sideways, but I just think by the end of the reporting season, we've put in a new high, and then we fall off. But so yes, we need that to continue, and we want to see some actual progression in the earnings growth rate for the bigger stocks, just to cement, because so far that has been the case. Some people are trying to make out that trailing earnings isn't necessarily catching up with the forward earnings multiples, but that's a moot argument when they're still growing exponentially. I think once the growth rate slows down, that's when we need to start worrying. So we got into last week with looking for some consumer numbers. I saw this good chart on what they call the beverage curve, and this is where the job openings start falling, as well as actual job numbers, and that's what people are worried about, that one leads into the other. But we had consumer retail sales held up. That would have been the final nail and may have caused a July cut, but that didn't happen. Outside that, Delta and United are moaning about internal weakness, having to put big discounts in there, saying that people are balking at paying prices. That's more evidence that the consumer is holding back on the discretionary spend. Interestingly, Ryanair came out today saying they expect a price war in Europe, and in fact, in the import price numbers from the US, a lot of the record move has been attributed to actual airline fares going to the rest of the world. So that might actually help on the US side of things, calm it all down a little bit, because airfares in general have been high, and particularly for people, the supposedly record numbers traveling out of the US, and they're obviously bidding it up, and they're not all going to Taylor Swift concerts. Again, Apple will be important coming through this season. I mentioned last week, they are the ones that do need to follow through on their high rating. Hopefully you saw last week when we talked about it, the Taylor Swift effect, and she's coming back in August. That kind of makes it quite imperative that they go for, and they can say that it's a one and watchful, but I do think we need to start the cycle off in the UK. So at the moment, GU is quite well bid. It's not all necessarily about weakness in the dollar. It's because people aren't trusting that August rate cut. I'd just like to see them put that in with the right narrative, so we can still get sterling strength, but we start to just take the pressure off households. And they had a 6-week talking head embargo because of the election, and no one's really said anything apart from the 3 hawks. So I'm not quite sure why that is. Bailey normally likes to speak all the time, despite the fact he's confusing. So we'll see what happens. They are now in lockdown, as the Fed are, and I think the Bank of Japan are. So there's only really going to be Europeans that will be saying anything. And certain other, we put that chart out. There's a lot of meetings coming up in the next 2 or 3 weeks globally. So talking heads wise, fairly quiet. So hopefully the market can speak for itself. That's what we're saying today. That movement in the Russell last week, 5 days up 12%. That's the highest that index has ever done. And we said on Friday, I think we had 2 or 3 1% down days. In the tech side of things, that hasn't happened for a long time. So I think the IMF, who don't necessarily always come across well, might have been headline seeking, talking about slowing disinflation path when we've got this whole setup in Asia. If we're not careful, we're going to get this deflation tsunami shooting across the globe, which is another reason why they need to stay on top of this, because you don't want to get behind that. So I just highlighted when the rest of the Mag 7 report, that is Microsoft and Meta next week, plus Amazon. So that's Tuesday, Wednesday, Thursday, isn't it? And Apple on the Thursday. And then there's a big break of 3 weeks to NVIDIA. So natural play would be a bounce to get us back into a bullish path. Somewhere in that middle, have a consolidation. The usual hype into NVIDIA, into a rise and coming off. And that would probably sit well with the pattern that I've got set up. Any other questions on anything that I said there? So I think when we go through it, a lot of the indices are set up for potential bounces or sideways patterns where they're equally have got an up leg coming, and that's played out so far today. UJ is strangely weak. When we did have some strength earlier in the dollar on some of the other crosses, that is definitely to do with what you start to see was movements into Swiss franc and yen defensively through the China data rather than anything to do with the US politics, I think. Yeah, I'll show you what I think on DAX in a few minutes. I think that potentially has gone into a wider consolidation than we thought. So it's got impulse to come. I think we're just doing an extended sideways move, of which we're just bouncing along off the lows. Right, I'll just run through some of the charts. What have we got? That could still happen, Ed. I'll show you what I mean in a minute. The New York overall advanced declines, the aggregate was running at a real high into last week until we started seeing a bit of reversal on that, I think, under the hood. And as Nasdaq showing you today, this is showing you it's back at neutral. It's a small negative. But that isn't necessarily negative for the indices at large. It's just the rotation coming off. It might harm the Dow a little bit relative, but S&P and Nasdaq wise, that isn't necessarily going to off-put them. We had a number of days in here where we had negative correlation between the AD line and whether the market was going up or down, and that really encapsulated what happened in the market cap rotations. So perversely, this going back into negative could mean that we're about to have an extended period of bounce back from the higher caps. I thought this was interesting. Remember how we've been talking about the VIX and not being worried about it until it jumped into the 20s. This is why we've been since that 21, early 22 top. We've been in this channel, the fear and greed. I was saying earlier, I wouldn't really get too panicky unless we went below 10 and got into that lower end of that. And equally here, we've bounced into 16s. So it's only really if we go into 20 and above that we've got fear breakout. So we are still just mid-trend, if not just in the upper half of it. So it's elevated, but that could easily come straight back down to this 12 level that we've been trading off into strong earnings. And our usual put the VIX compared to the bond index. So the bonds, the volatility is going out of them because people are buying bonds in general across the curve. They're happier. They're seeing the rate cycle start. So there's very little overbought pressure either. It's all coming in without having extreme moves. And obviously, this was a strange thing that happened on Friday. I thought I saw that when I was flicking through and didn't comment on it. Sorry, on this near doji, somebody did put in a low print on the VIX, the S&P, whether it was misinterpreted or whether it was the Biden family knowing what they were doing. But obviously, we're now starting to consolidate and come off from those higher levels. Potentially, I'd say, coming back down here, unwinding this small panic of the last week or so. Just doing this in backward order, getting the rubbish ones out of the way. Oil, as I said, is annoying because this could easily have put in the top of the second wave. We could make a case for a zigzag here, in which case this is building up for breakdown. I'm still playing the fact that this should be a consolidator to the final surge up, but just be cautionary with what's going on in China. China is crucial to the demand picture for oil. So if they really are rolling over in a bad way, then oil is something to be avoided. Because if this is right, then we're into a third wave down where that will accelerate. So I'm just going to say nothing done in oil for the minute until we get a clearer pattern. Let's work through. Right, so yeah, DAX. Remember, we thought we'd hit this minute wave 4 over here. Minuet wave 4, sorry. And then a 5 to put in the minute wave 1 up. And to be nesting, because we've never taken out the low since the middle of June. But this could actually be a series of 3 waves, a WX, and then we might be putting a Y in which case we will put a lower low in. But right now, this could easily be, we're expecting a bounce either way on that. We'd be expecting a bounce, which we've got. And it's back through the 50-day moving average. It's tricky because with it being such lacking in real breakout, obviously we need that high taking out there really at 18,800. So this could easily be just a connector before we put more downside in, which brings us back to that 18,000 idea. So yeah, I mean, let's get rid of that. So yeah, I mean, that is a 61.80 fib area, 18,500, and then we go again, and the double on that. Just from looking at it, looks like it is. Yeah, so that would take us to 17,900, 18,000 on a equal legs double. So yeah, I wouldn't rule it out for now. Obviously, we are mid move, so we need to move to one of those extremes Although that is definitely a reasonable trade to take as a sell with sort of 18.5, 18.550 as a stop loss. We know what we're playing with. But it did put the bounce in that it looked like if that was a 3-wave and finished, then we should have had the bounce. If it's a connector, we should have had the bounce. So I was quite happy that we were in a short-term buy situation, but as you say, it's moved quickly, and I wouldn't put you off that short-term sell trade. No, I just think we were set up for a small relief rally just because the way that it had all gone. Sometimes you just get them and then they end up being just a connector. They don't have enough impulse, and then the predominant trend returns, and it is mixed. Like I said, I don't like the way the FTSE and the DAX have both been moving sideways rather than impulsing out. They both look like they're doing extended returns. I said on Friday, I'd be surprised if FTSE actually took out this high. This 3 high over here, which could actually be the blue 3, whatever. But I do think we're just extending this 4th wave, really. I don't think there's necessarily enough impulse unless the US indices go absolutely crazy. But again, we haven't got a lot of tech index in the UK. Some of the results that came out of Sweden last week aren't particularly helpful because the capital goods stocks were all missing on new orders, 5% misses. So that isn't good for the value play, sort of cyclical return. China's not good for the cyclical movement, which is what dominates FTSE, and to a certain extent, Germany's got a little bit more tech, but relative. I'd be surprised if these things don't really break out relatively until the US tech trade formally unwinds. Then it's a relative bet. But let's say Europe is at a massive discount, record discount to the US. At some point that will correct. But again, we're struggling to take out this. This is the 50-day moving average, isn't it? The FTSE, it's been holding it for a good couple of weeks now, 3 weeks. That gets you to 8,250. So any kind of false breakout to that, then it's dump time, isn't it? And again, equal legs is down here at 8,022 for that whole move, which at the moment looks like it to finish, looks like it needs another couple of microwaves. So I wouldn't, I've been praying to get it down here because I want to buy it sub 8,000. So again, where's the cutoff for that? 8,350 negates that setup probably and tells you that we are still nesting towards a new all-time high. So where that's a decent stop loss to have. Again, the Nikkei, it's still holding into what looks like the flat, if not zigzag. It's done 3 waves. It's gone into the zone where we said it would retest just below 40,000. Should be a trading buy, really, with that previous low, which would be a second set of lower 4th waves. 39,200 is probably a stop loss for a trading buy. For that to be something else. But we've got to get through all the yen shenanigans of the next few days, so it may be that we do some kind of bounce and a final sell-off as we go through that. We'll have to see. The weaker yen will support the Nikkei 225 versus the Topics, which so far is holding in. Mr. Buffett, I saw a great chart, all the tech stocks getting hammered, and Berkshire Hathaway were up 7.5% relative, and he's invested heavily over here and tons. He's been starting off around here and here, investing into the financials and insurers. Absolutely brilliant, isn't it? But a 30% outperformance on his Topics bets. Well, yeah, obviously short time frames, you need to be tighter to what you're doing, or you're playing with small amounts. But yeah, I mean, maybe for Nikkei to move further up, we'll have a bit of reversion back to this 50-day moving average as a signal, but at the moment, it's early days on that. There are 5 swings. It's consolidating, but is it over? I don't know. Keep an eye on that, on the Topics. Obviously, you can't trade it, but it's a good signal for when people might be going back into the larger caps over there. Yeah, so what did I do now? All right, yeah, the green channel is the 2, 3, 4 anticipation of the black waves, which are the primary waves. So that is still valid for that. This is an overthrow, but like I said, don't want to see this come back too much into here. It starts to get problematic for that 5 finishing up there. Because we could drag this all back down here, and all 3 of those waves are valid, and the primary wave could actually be sat on top of its existing channel. So that is, I'd probably say 50-50 view on both of those happening. If that primary is finished there, then obviously a cross of the channel is possible, and that gets us to 18,000. But this is against what we were talking about earlier, where we're expecting maybe a little bit of weakness short term, but really topping out into the middle of August. And then that's why I think the seasonality gives us a proper pullback, and that could be the 10-15% that we've been waiting for. I just think we're going to get the benefit. Perhaps we're going to get some decent beats, but the momentum of it just starts to show a little cracking in the rate of change of the beats as we get to the end of that cycle. People will still be happy to pay the multiples, but that will be a proper sign of you should start thinking about rotating. So how do you look at that in terms of, some people say leave 10% for the next man, which is why people have started rotating here, if that's going to be a decent pullback, in which case we're halfway between the top and pullback for now. If you're a big investor, often rather than chasing the top bit and seeing some demand to sell into, would rotate into that with an obvious opportunity of buying it back later in the year. So that may be what we start seeing here. Retail funds probably come in, carry on coming in, institutions, hedges rotate into that, into strength. And that's when we get the selling and some panicky retail selling on the back of it. That's probably, well, what we need to look out for there is a Bank of America fund survey to give us any clues on who's doing the buying and selling. Yeah, so that's the only worrying thing in this picture, is that we've had a small overthrow of 19,500, which it bounced off on the hourly chart. Which makes a lot of that problematic. I'll have a little redraw of that, because that either brings us down, as we were suggesting from the other chart, or it moves this 3 up, in which case that 4 is valid and it's irrelevant how it's trading there. So big action. I think obviously what that tells us is if we break that 19,500 again from this bounce back, this one over here becomes very important. 18,935, and a 3% down. You'd want it to hold within here for there to be more upside. Otherwise, we're into a different degree of sell-off. So I'll have a play with that afterwards and see how that exactly changes things. S&P 500, where are you? All right, let's get a super messy chart out that we like. Let's get rid of a few things. Right, so if that is the top of the third wave and we're in this fourth wave, obviously we're not a million miles away from 50-day moving average test, which we've held all the way up in this fifth wave channel. %38 pullback is 5,000. That's quite a deep pullback. So again, all about earnings season, really. Again, as we know, this is what we're looking for before the previous fourth wave is down here. Again, 5,300. So again, that 5,000 limit. So my first instinct is that we're going to be somewhere in between these 2, 3, and 4s for a potential pullback. It's a test of the 50-day. But how much we can bounce first, there's no reason why this pullback can't be here, hold the 50-day, blah, blah, blah. But on a daily basis, it does look like it's set up for potentially doing a double. It's going to be tough to need to see a bit more evidence on that. So if you think the Nasdaq's going to continue bouncing, it won't necessarily leave the S&P behind unless there's rotation going on out of the larger tech. I mean, it could be a valid 3-wave on a daily basis. We've had lows and highs intraday and the middle day. So it is a valid place to bounce, but it is quite a shallow pullback. It's only about 14% It's a very rare fib to bounce off. You'd have really expected a test of this area here, wouldn't you? 54.40, so maybe another 2%. The 50-day moving average, that's where the strong confluence is, but it's all down to the earnings, I think, for the setup on that one. And again, if you look at it on the hourly basis, in these minute waves, it's been trading so tight to the 2-3. It's hit the forecast 4 bottom and bounced off it. So you can see on the hourly basis here we have a 3 swing move down that is valid. So this could be, it's valid that we're rallying from off there. We don't need to go much further in the construct of this channel, which again, it's suggesting 5,700 for a breakout finish, really, into the end of July, into mid-August, 5,750. So looking at the daily and hourly combined, pretty much looks like 5,500 is your stop loss for a buy. Wouldn't really want to advise a sell going into tech earnings, even though on the daily basis it could want to do more, but we can see at the lower time frame it's done enough to be valid and has got this powerful Elliott wave parallel channel in place. So I think I'll stick with the 3, 4, 5s of whatever degrees we've been talking about for NASDAQ and S&P. The problem I've got overall is the next one. Sorry, I haven't switched on to This is the S&P 500 hourly chart. It's in the parallel channels estimated from once you got 1, 2, and 3 in. We do it through 2, 3 to estimate where 4 is. And it's bounced right off the bottom of that channel, which is leading me to think that, yeah, I'll do gold. I'm coming up to it. I'm just going reverse order for once because the indices guys were here first. But thank you, Safia. So yes, you probably didn't see the daily one, did you there? I was just saying it looked like it could potentially be valid from the daily basis of a 3 swing pullback, but it is quite shallow on the daily basis. And the kind of support area lines up with the 50-day moving average, which is where you kind of expect maybe there to be another pullback. Could happen, but just dropping into the lower time frame and the fact that we've got tech earnings on Tuesday night, which are expected to be, I'm just thinking perhaps we are into this 5th wave already. So stop loss at the channel bottom. S&P equal weight, which I said we predicted the breakout for rotation, which is what we got, and then we were talking about unwinding that rotation. We'd expect the equal weight to underperform again, which we've just seen that the market cap one's going up, this one is coming down. That looks like we're unwinding that rotation a little bit. If anything, this is topped out and we're going to come back and potentially break through this triangle and go the other way just to top out. And then ultimately into August, we'll put in a new high for the S&P equal weight probably relative to the tech coming off. But again, it depends just how much the tech comes off. The Dow is the one that I'm really struggling with. And again, I said it might be due to the fact that we've got a lot of industrials involved, not too much tech. And even if the tech's involved, it's all about prices rather than market cap. So they can go up, but still not have that much of an impact. We were talking on Friday how this is grinding up. I mean, it's overlapping. So it can be a valid fifth wave, an ending diagonal, but kind of feel like it's, even though it's put in a higher high, I think it's got less momentum than the others. So if the others go up 3 or 4%, this one's a couple of percent maybe, and tops out. What have we got here? We've got divergence in higher highs and lower lows on the McClellan advanced decline oscillator. It's never a great sign, so that's kind of suggesting we're moving towards a top. If we suddenly got, so that's within the 1, 2, the highest is a 3. So we can have a top here. This McClellan advance stays below this peak here. That would probably suggest this wave has finished. So we'll see how we go for the next couple of weeks. You can see from the previous chart that we'd gone into we've gone to a new high and some consolidation. My thinking hasn't really changed since Friday. We do look more impulsive on the way down at the moment into a consolidation leg. That to me suggests a small reversal at some point in the Dow and an equal legs before it goes higher again. But it's just overall all this very overlappy nature, and this can actually be relabeled 1, 2, 3, 4, 5. We could move this 3 and 4 just to leave us the last change like we had on the daily chart. I'll tidy that up and see which one's actually predominant. So still the same position, Nasdaq, S&P to dominate Dow, I think, in the short term. Here we go. So GU, let's go through the currencies and then we'll do gold and silver. Obviously we thought there might be a little bit of dollar strength today. Where's that gone? But the dollar looks like it's still going down to put a final wave in for this impulsive move down, which should create a little bit of strength for GU and EU. We talked about a window perhaps for the UK to cut next week, in which case the strength here may end up being a connector to doing a double. It is quite a shallow pullback for a wave 2. They're normally more like the 61.8. So the fact this hasn't got impulsive to a breakout yet makes me suspicious. But if you do have shallow wave 2s, that's normally more often than not the precursor to a big wave 3. So that fundamentally would sit with the UK doing nothing and Jackson Hole saying that there's going to be a rate cut in the States, and you'd get a big breakout in GU. So we need to keep an eye on that. Obviously, the current low for the wave 2, 129 effectively. If that breaks, then we're probably doing a double extension. EU haven't moved for a while because it's been playing out perfectly. Same thing sort of stands. EU are wavering, saying their data, remember they're data dependent, not data point dependent, because they don't want to get tied to any one figure. But this is all really going to be about the dollar in the short term, I think. Got PMIs all across the board globally tomorrow, so we'll see how they read through. Look out for prices paid. That will give you the guidance on who's got the potential to move the most. But I'd be surprised if the Bank of England don't grasp the opportunity to cut rates just to get them back in line ready for September. with when the EU and US probably go again. Remember, it's a relative game, so if the EU and US go, there's no impact other than what the outlook is. So that could give us a bit longer sideways movement until we get into next week. End of the week, we've got, let's move that across just to allow for time. We've got PCE and US GDP, which should be benign on the prices because we know the CPI and PPI figures that go into PCE, they were all soft. There's potential for them to be softer rather than now surprise to the upside, which again would be a kicker for dollar weakness. And again, might be enough to get us this little final leg up. And then this 4, it's only there for you to see. It could be anywhere down here. And again, so it's set up for sideways to up really on the EU, but because we're in a consolidation sideways, is that potential for doing a double? We'll have to see, literally have to see how the price action goes in the first few days of the week. But it feels like we're setting up for a small breakout. UJ, I mentioned this earlier. Both of those wave channels behaved inside each other. We put in a cycle high. That channel was broken decisively. The question here is, where is the end of the first swing down? Is it where we've got the current wave 4, in which case we're doing a consolidator and then potentially doing a double? At the moment, I've got it as a 3-wave swing, a consolidator, and that we've done another 3-wave swing. If you, and we said it on Friday, it depends how you want to play it. That is now an obvious stop loss for people who believe in dollar strength, yen weakness. But as I said, we look set up for one further bit of weakness, in which case this consolidation should have 5 legs down, of which we probably put in 1. So we could have another couple of swings down to potentially come into this 1 to 1.68 region. We don't want to go below here, below 152, because that starts negating a lot of the pattern, in which case we are into something completely different. 155, 152 is where a lot of the options work was done. We're now starting to see a lot of the open interest futures on the short side close, which I might be able to show you some of that. That was as of last Tuesday. See if we can see that. It's a very good point, Desmond. That's the problem. A lot of these things do look the same and they all look like they are consolidating and close to ends. Patience is the key. I think we're forever looking for a trade, and most of them look like classic consolidations, which we're close to the end of, some of which may just extend. But we've got to be cognizant on the indices that on the tech side of things, that could just go and the others don't necessarily move. But yeah, no, very good comment. So hopefully you can see that, which is that's the 16th commitment of traders positioning on the CME website. Where were we? Where's yen gone? Right, there's yen. So that was the key. The overall change is 41,000 on the open interest, driven in the leverage funds by the shorts reducing by 39,000 and the longs by just 3,000. So that's basically about a quarter of the open short interest from the hedge funds came off last week. So a lot of the fast money trade. So keep an eye on what's going on there. Even the institutions which were running shorts reduced their exposure by 15%. So we'll keep an eye on that trend, because net that with where we are in the trade just gives the yen the opportunity. The thing I'm worried about with the yen, like I said, is the Asia problem with China, and the yen does not like to get too far away from where that Chinese band is. They start to get all sorts of intra-regional issues, imports start getting expensive, blah, blah, blah. So it might make them pause on putting the rates up. Now, the market might not necessarily like that, given how much it's already deeply retraced. In which case, we've got to get to the 31st of July, which is over here, before their meeting. Obviously, what we got on Friday, we should really know whether they've got room to particularly get aggressive on rates. With the Tokyo CPI at the moment, it's not really expected to move much from expectation. It will be in their zone of where they're happy to consider inflation embedding, but the rhetoric that we've heard so far for the last couple of weeks, if anything, is reining in interest rate hikes in favour of the JGBs. But they might get rescued with the dollar weakness. So the final, and that actually sits with, coming to here, because when I show you the dollar chart in a minute, I'm expecting one more little sell-off before it consolidates. So in combination with a classically Bank of Japan bodged update at the end of what will then be a 5-wave move, it would be set up for a bounce of some sorts, maybe back up through that 158 level. But we'll have to, again, we just have to step carefully through the fundamentals on that. And what I mean by that, on DXY, we start to get the consistent 1-2s, 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 and then within this, we've put in 1, 2, 3 on the way down. This probably is a fourth consolidation. We said last week with Trump, there might even be more of a consolidation in the dollar, which was this one here. Looks like we've failed to double that at the moment. So if we get any kind of acceleration to downside, looking for a lower low, so put in 5 waves of 1 of 5 down, but then that puts us back into this basically dollar strength period. Is that, do you have a flight to safety combination with the sell-off potentially of the large caps, as we've discussed earlier in the index commentary? But let's get the low in first, and that looks like we're either going to do another extension and come off, or it's already nesting to come down. I'd lean towards the latter. So if anything, we've got dollar strength ahead of us for the next, dollar weakness in the next 10 days or so. Which takes us annoyingly to the one that isn't really trading off the dollar. Which is our good old mate, gold, isn't it? So we're in a region of support, which we're testing, and there's physical orders in here, which I'll show you why I think that in a minute. But the yellow line is the invalidation line for it still to be in a fifth blue wave potential, because it's got lots of overlap. If it goes into overlap, then it's an ending diagonal, which isn't really a problem for 3, 4, 5 is fine. That wasn't an overlap, so it can do whatever it wants. and then that would complete the minor wave 3. So it's all still valid. We're getting tests in here into this support zone, and I think there are physical buyers sat here that were down here at 2300. They've moved up to 24, just below. That's what caused a lot of the issues at the start of July, that there've been lots of hits into physical buying down here, which had started off down around here, which we got that 2 bottoming. We then had people trying to scramble in as they knew they'd got July stop orders to come. We saw there were thousands of contracts that were being exercised, and that took us all the way up to here. This sell-off period from the middle of last week seemed to coincide with there being very few stops, gold deliveries. And hence we're now in this discovery period. So again, like I said, it can even break that in terms of being a classic normal wave of a higher degree. We'll have to stick with that being an ending diagonal. If that were to happen, it doesn't invalidate anything. It only invalidates if we take out the 2290 sort of level, then you're into something completely different. What shouldn't happen though, let's be honest, is that the size of 1 and 2, the second wave relative to the fourth wave, should be more or less the same in an ending diagonal, of which they are just about. So you wouldn't want to see too much more downside, or we might have to consider that this was actually a higher degree top. We might have to roll this down, in which case this could be a deeper sell-off. So net at the moment, there is still potential for downside, there's still potential for upside. We're right in the middle of, so with my base case setup, we're on the bottom of the channel. So if you're playing long, I would have 2370, 2369 as a stop loss, because if not, if that goes, the bias, even though it can still be in an ending diagonal, starts to lean towards having properly topped over here. And then we're into a deeper wave 4 pullback, which could take us back below 2300. So annoyingly, price action has just got to be watched for the minute in this. It's hard to call. There's every reason why it could suddenly flip and go to new highs based on physical demand buying, weaker dollar coming up for the next few days. But this hasn't really been correlating with the dollar per se. We've been coming off as the dollar has been. So gold is in a tricky phase at the moment. Why did I think that there was some delivery on Friday? This was it. So I went back and checked on the end of Friday, and that was 2040. Much later than everyone, after we obviously talked in the afternoon when there weren't any at all. So I just started to hit a couple. We've just gone through 2400, bouncing around. Makes me suspect that there are some physical orders to get hit, and we're probably hitting them at the moment. Market working out just how big they are, whether it needs to worry. So yeah, it's all down to what the physical players want to do. Do they want to try and scale it down, get the sellers short at lower levels, or do they just stand there in a line? Don't know who the actual buyer is at the moment. Could easily be a central bank. It probably doesn't even have to be China. We know there's been enough demand from India, Czechoslovakia and Slovenia lately that that was enough to create all that demand. So is there anything else on gold to look at? So on the 15-minute channel, it has been, obviously, it's crossed the channel, it's walked down. It's just on the verge of moving away from that downtrend, but you obviously need that to dig in and move back up. But what we had, the volatility is getting wider, in which case we could try and reclaim today's highs later on with that, in order, because remember, the mean reversion, if it continues, is to cross the channel at some point, and that channel is diverging rather than the contracting like it did here. But just that kind of price action, it's just telling you that there are sellers in that 24, 2010 area that don't want to move. So it's whatever the buyers want to do at the minute. Do they just try and walk people down? They don't seem to have any appetite of taking out the paper sellers just yet, around 2400. So that's almost a top, isn't it? On the sell side, you've got a stop loss back up here at 2400 if you want to take it on, but it's so volatile. If anything, you want to be trading around with that 2410 level. That's the other side of the Bollinger Band. That's when you know you've got something else happening. If you happen to have a few candles in that upper one standard deviation band, you know that you're probably going to get walked up. So what does that give you? That's 0.5% of stop loss on gold if you want to short it. But for a minute, it's slightly confusing. Did I have silver? We haven't done silver, haven't we? So silver is obviously trading along with gold. We know where the buy stop loss is at the minute, which is on that trend channel break. Well, I mean, we're basically on it. We've broken the trend channel. 1 for 1 sell-off comes down here at 28.41.40. If anything, that feels like it might go further down. Until gold digs in, I don't really see silver outperforming it at the moment. So don't really want to catch this falling knife on silver at the moment until we know that the gold trend has reasserted itself. But once it is, it should go strongly. Remember, the cup and handle is still in place until that takes out 23. So nothing's changed really for the long time scale breakout. That's on the gold tab, isn't it? The relationship between them. So, you know, ratio wise, we were expecting that line to potentially break. Silver's obviously going the other way for the minute, but that's a small degree. Weekly 3-wave might just be a consolidation before it reasserts itself. Just need to keep an eye on that. Obviously, we've had an impulsive wave down. We've consolidated it. We look like we're in the next leg down. We just need gold to start leading us again. That is the issue for silver. And the only other one I had, we haven't discussed. Remember, I mentioned there's lots of inflows into bonds at the moment. The 20-year bond had a golden cross last week. Normally a precursor to a big move in bonds when that happens. We talked about that from the 10-year, so we're now starting to see buyers come in across the curve in the US, which is obviously supportive for valuations. So keep all that in mind. Any other questions from anybody? I hope I haven't completely put you to sleep. I hope that all worked properly. I think Desmond's summed that up nicely. There is a lot of consolidation going on. Be patient, pick up your moments. Don't be scared of there being another high in the tech-related indices. Be careful of dollar weakness in the next 10 days unless something dramatic happens. And I think we're playing for mid-August topping out until things really change on that. And obviously, this all going to commentaries are going to be all about Harris for a few days and what she can dream up. But really, it's quite a big lead for the Trump 2.0 camp. If anything, it's nailed on, isn't it? So we need to look, and I think the signs of them softening a lot of their hardline, crazy fiscal policy rhetoric. So the bond market is certainly telling you that they're not going to be as crazy as first thought, in which case the whole tech thing becomes positive again. They're probably not as hardline on the whole anti-Chinese thing. As I mentioned earlier, NVIDIA are creating yet another chip which meets with the regulations. So underlying earnings continue to be strong. Then you've got decent support for this breakout for the next few weeks until the whole thing consolidates properly. But let's not get ahead of ourselves. Just be careful. We've had a lot of volatility, and it's still potentially there. Good luck. Be careful on those shorter time frames, because it's going to be quite whippy. So if there's no more questions, thanks for joining me, and we'll speak on Friday.